All right, and welcome back to another episode of the Indy Investor Pod. We are Indy investors talking Indy investing. In this podcast, we like to dive into just helping people and educating people on just the Indy real estate market, what's going on, what's happening, and looking at some tips, some tricks. Have some investors on here that have the experience, so really just leading that way. So with that, I got an awesome episode today with Nathan Custer. He's just doing a little bit of everything, so I'm excited to jump into this conversation with him. And with that, let's get on with the show. All right, and welcome back to another episode of the Indy Investor Pod. I got Mr. Nathan Custer with me here today, the Moose. What's going on, man?
Hey, Brian, good to see you. The Moose,
Awesome.
I like that.
Yeah.
Throwing it back to the college nicknames.
There we go. So the college nicknames, I got to throw this out. So we did a whitewater rafting trip, and Nathan came with us a couple of weeks ago and just really just tore it up. He was a great guy to have out there on the river and stuff like that, man. So it was good to connect with you, like just on a personal level, but then also talk some real estate, man. And I was like, we started talking about, just your investing and what you're doing and projects you're doing with Silverthorne Homes and things like that. And I was like, man, I got to get this guy on the podcast. So I know you got a wealth of knowledge, and I'm excited to pick your brain a little bit here today.
Well, I appreciate that. That was a really fun trip. And it is a pleasure to be here on the podcast. And by the way, for all of your listeners, if they're ever going on a trip and they need somebody to start a fire with like 2 twigs, you're the guy.
I can
Brian
do that.
is
So
a Boy
I got
Scout.
some skills.
Yep.
So,
Yep.
All right. So let's get into a little bit of, I'd love for you to just kind of tell, the listeners just a little bit of your story of how you got into real estate and then real estate investing as well, and kind of just take us along that journey a little bit, man.
Sure. So I actually got into real estate investing in 2006. I was a couple years out of college. I went to IU and I bought a townhome in a neighborhood that you're familiar with there, Brian.
Yeah, we found out through talking that Nathan actually was the listing agent for the townhome that my wife bought,
That's right.
whatever it was, like 12 years ago or something. So yeah.
Yep. So I worked for the builder at the time, and I purchased a townhome that the builder that I worked for had constructed. And at the time in 2006, for those of you familiar with the market in Indy at that time, we felt the softening of the market before a lot of other areas around the country. So I purchased this townhome thinking, wow, we're at the bottom of the market. What a great investment. And then I end up working in that neighborhood as a builder representative, selling townhomes for $20,000, $30,000, $40,000 less in the coming 2 years. So I was a bit disillusioned in real estate investing kind of right off the bat. And so my investing shift really went towards investing in equities, stocks, mutual funds, ETFs, index funds. So I happened to invest in another home when I met my wife, and we turned her condo into a rental. But my second intentional investment was a flip in 2016. So there was a big gap there between my initial investment in 2006 and 2016. And how that all came about was I had built a home for my family in 2015, personally built. So I designed it, had it drafted, and then I was the GM there on site, or the GC. So when I finished completion of construction in 2015, I had a significant amount of equity in the home. And my loan officer said, well, why don't you open up a home equity line of credit? And I said, well, I don't know. I don't need that. And then he told me how much I could get. And so I opened it, because it's better to have it and not need it than need it and not have it, was my justification. So then I thought for a few months, how can I put this money to work that's otherwise just sitting in home equity? So one of the options that I came to was attending sheriff sales and buying fix and flips. So that's what I really started doing. So in 2016, I started buying sheriff sales. The first one went great, turned it around in less than 30 days, made a good return on investment. And at that time, you could go to the sheriff sale. There was very little competition. You could pick them up for a great price and make an amazing profit. So between 2016 and 2018, I flipped between 8 and 12 a year just on homes that I bought from sheriff sale. In 2018 to 2019, the market really shifted in that the competition at sheriff sale really picked up.
Yeah.
So the prices of the property shot up, and the criteria that I had really honed in on during that period, which I felt like I got a great process in line. My criteria had to change because the opportunity just wasn't there. So 2018 to 2019, I focused on larger projects that weren't cookie cutter. And by the way, my niche was cookie cutter. So I love the homes in Hamilton County. I didn't buy anything older than 2000.
Let's talk about that a little bit of just like kind of that need,
Yeah,
or
sure.
that when you're talking about, how you had to change, you couldn't get the cookie cutters anymore, that type of thing. So when you decided to take on some bigger projects, was that like, how did you come about that decision? Was that like because you needed to, or because you wanted to, or was that just like, oh, I flipped these cookie cutter homes. That wasn't hard. I can take
Yeah.
on some bigger projects. Like, what was your thought process through that?
So a lot of it was a limited supply, and I had to change my line of thinking. So I started looking towards bigger projects, and my background is in new home construction. Up until I built my own home, it was all on the sales front. So when I built my own home, it really opened my eyes to the opportunities there on the construction side, and really kind of ignited a passion inside of me that I didn't really know was there until then.
Yeah.
So my background in new construction, I'm thinking I'll buy an older home, gut it to studs, and rebuild it. And well, I know new construction, so why can't I just do that? It's the same thing,
Same
right?
stuff, right? Yeah.
It is not the same thing whatsoever. So I had some well-earned or hard-earned wisdom during those years. And by the way, they were all great projects. It just wasn't as easy and quick as my previous criteria.
Yeah. Well, I mean, when you're flipping, you're used to flipping like 8 to 10 to 12, a year. When you're used to doing that, kind of those quick flips and stuff like that, all of a sudden you get into a project that, oh man, I'm into this like 3 months, 4 months, and it's a completely different beast and stuff. So I want to talk about that a little bit of kind of, if you can, we can kind of break this down a little bit of maybe just some tips that you have for people, investors out there that are doing some of those quick flips that want to get into, the cookie cutter type things and just, do the cosmetic and do some updates and things like that. And then we'll kind of take a next step of like, hey, when you're working on these older projects, what are some different things to do? So let's start with that. If there's, advice you have for people that are doing the quick flips that want to buy that cookie cutter home, or even just a smaller home even too, but it is a lot of cosmetic and updating stuff. What are some tips you have for the investors out there that are doing that?
Sure. I'd say, so what I've learned over the years is that it's critical prior to even engaging in a contract or in a project to make sure that you have multiple exit strategies. So when I went into it, I was only thinking fix and flip. So when I was at sheriff's sale even, or if I was looking at your portfolio, I was thinking, well, it doesn't work because it doesn't meet my fix and flip criteria. Looking back on that and knowing what I know now, that was definitely narrow-minded of me because there's so many more opportunities that are out there. And actually, when I look back at all the opportunities that I glazed over because I was specifically honing in on fix and flip, I kind of kicked myself a little bit.
That's always the ultimate investor dilemma of like when you look back at like projects from the past, like, oh man, I passed on that deal. I could have bought that and sold it on a note and mortgage, or I could have bought that and rented it out, or all those things probably, are flying around in your head and stuff and if you're a new investor, you'll be thinking that in like 5 years. So.
Right. Yeah. So I'd say no multiple exit strategies going into it and be able to analyze the property for those exit strategies. Also, pre-vet your contractors. You don't want to go into a project and then find your contractors. I know you've talked about this a lot on your show, but have that cohort of professionals around you prior to even engaging. Have them set up, ready to go, because if you're hiring a contract because you have to, you're much more likely to make a bad decision.
Yeah, that's great advice. Really doing your best to set up that team before you have that project in place. I know on the wholesaler side, that's our business. We always talk about like, hey, your first step is finding buyers. Because if you find a house, you need to have a buyer for it. Same thing, if you're flipping, you need to have those contractors, because once that house or that project comes across your plate, you need to have the people that go out there and fix it. So yeah, man, great advice. Let's kind of take that to the next level then. When you started doing these, kind of bigger projects and stuff, I know the one that you bought off of me, down in Fountain Square, that was a huge project. That was a big old, gut job, and turning a duplex into a single family and that type of thing. So when you're focused on those kind of bigger projects, what's some advice and some tips that you have for people that are really doing that? Maybe even if it's their, first 1 or 2 projects, if they're looking to get into it.
So my advice on something like that, and by the way, I'm coming at this from a standpoint of I've got a full-time job. And by the way, a full-time job that I love and I have no intention of leaving. So being able to invest in real estate is fun for me. It's not something that I do because I have to do, but my time, just like a lot of other people's, is limited. So when I look at these projects now, I really look at it from a standpoint of how much time am I going to have to invest in the project from A to Z. And so what I'm really trying to do now is build that team that I trust 100% to go out there and make things happen. Where I have, where I've been challenged in the past, some challenges that I've seen is making those decisions and hiring a contractor because I have to, and not thoroughly vetting out that contractor. By the way, we've got great resources in Indianapolis and all around with the Builders Association of Greater Indianapolis. Baggy is an amazing organization. And when you work with a builder or a contractor who's already a part of Baggy, they've already done the vetting for you. They've looked into the financials of these companies. And I know that Marion County isn't necessarily as integrated into Baggy as all the surrounding areas. And I know Marion County has their own smaller groups, but my first advice would be find a contractor who is aligned with Baggy, especially if you don't have the time to walk their projects, if you don't have time to call all their references. That's a big one for me. I only work with
that's a big thing even too. Yeah. When you are vetting contractors too, like go look at their projects. If they're not working on a project when you're vetting them, you got to think about that. Like, oh, okay, why aren't they working right now? Why aren't they doing that? So while you're vetting them, while you're talking to them, getting to know their relationship, like go check on their project. Go, ask if you can go walk the job site and things like that. So that's great advice, man. So when you're in those projects, then like from the standpoint of, okay, you vetted your contractors, you're getting into it and things like that, like Indianapolis, and I'll kind of put this out there too, because there's a lot of, investors that maybe are coming, that invest in Indy from, California, Colorado, New York, some other places and things like that. So when you are out of state and you are looking to flip properties, you vetted your contractor, you have them here, what are some things that maybe people need to be aware of on some of these, bigger projects or these older homes when they're working on that here in Indy that, maybe they don't see in other markets or anything like that? But when you're here in Indy, I know the foundation thing always is a huge thing of, checking that out and getting your eyes on that and stuff. But what are some other things that maybe have come up through your projects of like, oh, okay, I don't get this in new builds, but this is definitely something that I'm seeing in this older home here?
Sure. So, they don't build them like they used to.
Correct.
And thank goodness for that, right? Because these older homes, you have a whole host of issues that you're going to run into that could potentially really eat into your yield. You have brick foundations. You have a lot of block foundations. You have corrosion-prone piping within the homes, and even your sewer line going out to the street. So there's so many more variables involved. Whereas if you just started from scratch, new build, you don't necessarily have all those. And then if you do a complete teardown, you're rebuilding that whole home to meet current code. So energy code is a big challenge today to get these older homes to adhere to. Some of the, you don't necessarily have the thickness in walls because a lot of this was native timber. Some of them aren't full 2x4s. So you're really starting off trying to retrofit the home right out of the gate to make it meet current energy code and building code standards. So there are a whole host of additional variables that you've just got to be on the lookout for. And if you build in Marion County, I would suggest, especially if you're out of state and you have a turnkey company looking at it, I would say, at least for your first few, have an independent inspector checking that out. Marion County, in comparison to some other counties, are a bit lax when it comes to inspections. So Hamilton County, extremely rigorous. And a lot of the surrounding counties are the exact same way. Marion County is extremely busy, and they just don't necessarily have the manpower to keep up like I know they'd like to.
Yeah. So I do want to ask you too on, so with these, with these flip projects you did, you were knocking out, about 10 projects a year, doing these quick flips and stuff like that. And then kind of because of the, the inventory basically, or the need or not being able to pick up stuff up at the sheriff's sale, you kind of had to switch your strategy a little bit. So what's some advice you have for people out there, maybe thinking of like, or you even brought up the point of, oh, I do new construction. I can definitely, turn this old piece of, or this old house into, something beautiful and stuff, which I know you do, but what's some advice you have for somebody on that? I'm just like staying in your comfort zone and basically like, hey, even though I didn't have the inventory, I should have, really just kind of stuck to what I knew versus, kind of going into something new. So what's some advice you have for somebody on that?
It's all about discipline, like so much of business comes down to, right? So I had some crews that I really relied upon when I was doing the cookie cutter. And I was able to keep them because I kept them so busy during that time period. So the reason that I went for those larger projects was, one, to keep them busy, because I didn't want to lose the crews. I really had a team of great guys that I could rely upon. I knew I could turn them loose on a project, and they got done what needed to be done, all within a timely manner. It's hard to find, and I had it, so I wanted to keep them busy. And I did. And by the way, all these projects did turn out great. I just learned a lot along the way. So my first advice when it comes to everything when you're getting into investing is inspect what you expect and just be disciplined about it.
Yeah, great. Awesome stuff. So I want to switch gears here a little bit and kind of go into your, you as the landlord then. So you, having tenants and doing this, and you're managing your properties on your own, correct?
That's right.
So yeah, let's really dig into that. So I talk to a lot of people that are kind of in that spot of like, hey, what's the number I need to get to turn it over to a property manager? Or can I, if I need one, do I need a property manager? Can I manage it on my own? That kind of thing. So let's just kind of dig into that of, you managing properties on your own, you being your own landlord, your own property manager, all that stuff. What's some tips you have for people that are thinking about that? And if you reach that point of like, oh man, if I get to this number, I need to turn it over? Or have you had that, I'm ready to jump off the cliff and just get a property manager now? Or how do you handle that?
Sure. I think that all depends on your area, your tenants. I've been fortunate to have amazing tenants in all of my rentals. And I think a lot of that comes down to my screening process. There's some great screening tools online. Of course, I think most people use the 3 times income rule for rent. So that's obviously a key one. But making sure that you're utilizing those tools online, and don't be afraid to ask people the critical questions that you need to ask to thoroughly vet them. They're going to expect that you dig into their financials and get a little bit personal. And it's just a part of the process. So once you've vetted your tenant and you have good tenants, I do have a couple tips on keeping yourselves out of these homes, because I found early on with my rentals, I would get calls to change a light bulb in a 2-story entryway because they couldn't reach it, or gosh, the smoke alarm's chirping again, and I need a ladder to get up there to change it, or my dryer vent's clogged. I need you to hire somebody to come out and take care of it. So fairly early on, after a couple of those calls, I put a clause into my lease agreement that stated that the tenant is responsible for any repair at $100 or under.
Okay.
And that would include unclogging sinks, toilets, showers, replacing batteries and smoke alarms, replacing light bulbs. It's a simple thing, but it really cut down on my phone calls. Yeah. And that allows me to stay out of the properties and gives me the opportunity to manage more properties without bringing in a property manager. I'm not at the point where I feel like I need one.
Yeah. I feel like a simple clause like that too, maybe helps vet the tenants a little bit. So when you mention that during the, the interview process and stuff like that, they're like, oh, well, I can't do that, or I don't want to do that. That's going to tell you about the tenant. Like, well, you're probably not the tenant for me. So it's the same thing. Like the tenant needs to be the right person for you. You need to be the right person for the tenant and stuff. So yeah, that helps out. What's the, I'm always curious, and I like to ask people this, just especially when they're managing their own properties, of kind of like, what's the rule, or kind of what's the guideline you go by on when do you increase rent, or when is that appropriate, or how do you go about that? And, can I do it every year, or do I need to wait 3 years, or what's your philosophy on that? And what have you been able to do, I guess, with your tenants too, just for people out there?
Sure. So I typically increase a minimum of 3% a year. And it really depends on the property. Some areas I know my tenant is a bit more cash conscious and just might not have the ability to have that continued increase, but I want to keep them in there. Yeah. So I'll do something a little smaller, but I do an increase every year.
Okay. Nice.
My costs increase every year with insurance, taxes. So just from a business standpoint, you've got to do it.
Yeah, I like it. So that's a question I get a lot of times from investors, the buy and hold investors, of like, hey, especially ones that are starting off of like, can I really do that? Is that possible? And I mean, I know we've had that conversation. You're like, yeah, I do it every year. Like I have an increase in my costs, so they're gonna have an increase in their costs as well. So,
and you mentioned, oh, I'm sorry, Brian.
No, go ahead.
You mentioned vetting tenants, and that's a conversation that I have up front with them as far as what to expect.
Yeah.
So obviously I want my tenants to have an amazing experience. And the best way to set them up for that is to set proper expectations up front. I want this to be a great fit for them. I want them to be a good fit for me in the home. And I want them to expect a rent increase every year. If they've been paying rent, they expect that from their apartment complex,
Right.
or from their other landlords. So it is part of my discussion.
Yeah. Do you have any tips for those people that are, looking into maybe they're starting to look for their first, rental property, or their first, opportunity to buy and hold, or even to manage on their own? When you're analyzing properties, when you're looking at that, of like, what do you look for? And what are some of those things of like, hey, I know that I'm looking at this and I don't want this and things. So what are some tips you have around that?
Sure. So it's my criteria for investing in buy and hold is very similar to my criteria for fix and flips. I really don't want to look at anything that's older than 2000. Now that's ideal. I will, and I own things that are older than 2000. But I mentioned earlier, they don't build them like they used to. And right around that 2000, we had a lot of energy code and building code changes. So first off, I know what to expect within the home if it's not older than 2000.
Yeah.
And I know only a handful of issues could go wrong. So it really minimizes my exposure from a capital expenditure standpoint. So that's one criteria that I look for. Location is the other. I prefer Hamilton County. I know that Hamilton County is not going to meet the 1% rule in most cases, but my goal ultimately is cash on cash return, and making sure that I'm increasing in value over the long haul.
Yeah.
So those two things combined for me really override that 1% rule.
Yeah. Awesome. And why I have you on here too, I do want to dig into this, because I know this is what you're doing. This is your day job and stuff like that. So I want to touch on some of that stuff.
Sure,
So
absolutely.
you work with Silverthorne Homes, and they're partnered with, or I don't know if they're partners or they're the same company or whatever, is Arbor Homes and stuff like that. So let's get a little bit about what do you do for them, and what's your kind of background with what you're doing in that job?
Sure. So currently I'm the director of sales at Silverthorne Homes. And you're right, we are a sister company to Arbor Homes. I started with the company a little over 8 years ago now. At that time, we were just a privately held company. We were started, our founder lives here in the Indy area. So we were just a local company. About 2.5 years ago, we were acquired by Berkshire Hathaway, which just been an amazing experience. And I'm sure you know their business mindset. They like to acquire companies that are profitable and do a great job, and they just give them more capital to allow them to continue doing a great job and do more of what they do.
Yeah.
So what my focus is with Silverthorne from a market standpoint is we focus on the experienced home buyer. So where Arbor really focuses on the first-time home buyer, and you won't find a better built new home for less money here in Indy. We apply that same value proposition to the experienced buyer. So your move up buyer, your move down buyer, and a big part of our business, and the fastest growing part of our business, is on your lot. So we'll take the floor plans that we've developed here locally for the market, and we could build them anywhere, which from an investment standpoint, we tend to have a lot of investors reaching out to us to build homes on their own lot, both personally and to rent out as an investment property.
That's what Randy and I were having this. So Randy and I actually recorded some podcasts yesterday that are going to come out I think like a week or two after this one. But in talking about that, we talked about like the advantage of Indy as a market where it's actually possible to just have new construction that you're literally building to rent out. I think it's one of those markets that allows you to do that. I know people are doing it in Cincinnati and Columbus and, markets similar to this, but I think it's definitely possible in Indianapolis. So I wanted to kind of ask you on that, on that new construction side, do you guys have a lot of investors that are doing that? Are just like, hey, we're straight up, we're building this. This is going to be an investment property, like that kind of thing. Do you guys see that, or even on whether it's your side or the Arbor side or anything like that? And is it how possible that is in Indy?
Sure. So, and just backing up a little bit, a lot has changed in our market over the last few years to make that possible. Mm-hmm. So there has historically been a gap between price per square foot of existing homes and new construction. And new construction has historically held a premium to existing homes. Well, as inventory has shrunk and our ability to get lots out in front of us and cost increases, that gap has really narrowed to whereas today, you're really looking at a similar price per square foot, whether you're building an existing home or new. So if you could build new in the right location, why wouldn't you want to do that? And that's actually my focus right now, Brian, is finding opportunities where I can build to rent. So I'm looking for land. I'm looking in the right locations to do that. Because for me, for the same price per square foot, it doesn't make sense to buy an older home. Again, location is key on that. We don't have as many people as you might think reaching out to us to take advantage of that, which part of that is purposeful, because in our communities, we don't sell to investors. And the reason is our lot supply right now is limited. Our sales have far exceeded our expectations for the year. And this really goes for all builders in Indianapolis. So we're in a position where we are working to get that land out in front of us, and it's all there ready to go. It's in queue, but most of that land is in queue for 6 months up to 2 years from now. And so we're currently in the process of managing that gap to help even flow construction and get sales to a standpoint where it's a slower sales pace, but more sustainable in the long run. It's so odd to me, coming from new construction and being a sales guy, that we're actually in a market where we're trying to slow sales.
I mean, it's crazy. I mean, let's talk about that. Just like what, the market in general is crazy. And then, what the new construction market has done, even just since COVID hit and everything like that, with the inventory being low, and, people aren't having to sell necessarily their houses because they've been able to, apply for their forbearance, or they're not being foreclosed on right now, or whatever the situation is, that inventory is just low across the board. So new construction, especially in the outside areas, like Fortville just blowing up, Westfield blowing up, like all these places are huge. So let's talk a little bit about that, of just like kind of the new construction market around Indy, of what's going on right now and just how crazy it really is.
Sure. And you're right. It is crazy.
When you hear salesmen say, we need to slow down, I mean, you know something's up. So.
It is crazy. It's crazy fun. So back in April, when things really started slowing down, I never would have foreseen the activity that we're having right now. So right after COVID hit, middle of March, things shut down until about the end of April for us. We started seeing the market between that 150 and 250 price range really picking up quickly at the beginning of May. And for the buyers in that 300 to 375 price range, which is really our sweet spot for Silverthorne, that really started picking up at the beginning of June, and it is just not let loose. And a lot of the reason for that is there are a lot of reasons. One, we've all been cooped up in our homes and looking around with kids screaming everywhere, thinking this doesn't work. I need a private office to work out of, or gosh, I'm sick of my leaking kitchen sink. Or for whatever reason, people are just more conscious of what they don't like about their current living situation, be it that they're in a rental home or that they're in a home. So for that reason, a lot of people have looked at new construction or moving in general. Also, there's been a limited supply of existing homes going on the market. And a big part of that is reluctancy of buyers to have people walking through their homes. So that's been a big reason that we haven't seen as much inventory go up onto the market. Plus, with this little inventory, where are you going to move to unless you build a new home?
Right.
So it's kind of like a self-fulfilling prophecy a little bit. But it's really created we have supply issues in the market, and we just have a surge in demand.
Yeah. Awesome, man. Appreciate it. Appreciate you. Appreciate your time. Thank you so much for everything and stuff. As we're running short, I got one last little question for you. And that's just in general, you have any one last little tip or any last little trick or advice or anything for some of those investors out there that are, whether it's buy and hold or fix and flip or anything like that? What's just one little piece of advice that maybe we didn't mention before?
Absolutely. I would say get involved and get to know the people in the market. Build your network. There are a lot of people out there, and you guys especially, that are servant-minded. That's what I'd be looking for. I'd be looking for people who understand the abundancy mindset, where there's so much opportunity out there and there's enough for everybody. And folks like you aren't afraid to help everybody out, because we all realize that there's so much opportunity out there, and there are really no secrets in this industry. Right. So
we're all doing the same thing. So.
We're all doing the same thing. So find not only a mentor, but find a coach. Find somebody who's going to help you get clarity on your goals and what you're looking to accomplish, and then help you put an action plan together to get there.
Awesome stuff. So really appreciate it, brother. Thanks a lot for joining me today. And with that, that is this edition of the Indy Investor Pod, and we will see you next time. Take care.